Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hital Dadia. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, welcome to the show. Kunal, let's again start with the dollar index itself. Uh, Clearly, yesterday's session as well, it's tanked to almost a 2 month low. Fed has come out and said that inflation rising largely on transitionary factors. They've maintained their stance and the rates as well. What do you make of the dollar index from here on?
The dollar index has made a support of 90.50, and from there it is rising. Two, three factors to watch out for. One is rising yields. Why the bond yields and US are rising? Because the growth prospects after the vaccination process will be over. So there was a statement from mayor of New York that from July people will not be made mandatory to wear masks. So this kind of statements are really upbeat. So then the consumption will pick up and economy will boost, and hence the yields are also shooting up. So basically the inflationary expectation are rising, and since because of that there is a sell off in bond market, and because of that you see some bit of correction in bullion also. So I think 90.50 for the dollar index seems to be bottom for near term.
Okay, so that's with regards to where clearly the dollar index goes. Now, with this, gold as well today has fallen for the seventh straight day in a row. And similarly, there is a slight up move coming in with regards to where silver is concerned. What would your strategy be?
Gold and silver, my fundamental view doesn't change, but the fact remains is that for today evening session, I'm expecting some pullback after going down almost 6 straight days. So I'm expecting today some bounce back to come. So I'm expecting gold and silver both to move up. As far as levels are concerned, I'll just share my levels with you. Uh, Gold, I would recommend to go long at 990 and book your profit around 46,890. Uh, as far as silver is concerned, for silver also I'll give you my levels. Silver, you can go long at about 47,250. Put a strict stop loss of 46,980 and wait for the target of 67,650. So 67,280 is a good levels to go long.
Okay. And Kunal, with regards to crude, it has been trading slightly weak. We've seen a 0.5% downtick on NYMEX as well. And crude oil prices paid the previous day's gains as well. This was mainly on the data that came out from China with regards to the factory activity. Do you think that the disappointing data may keep oil prices under pressure? Or do you think we could start seeing an up move again?
No, I'm expecting oil to remain under pressure in today's trading session. 40 yesterday it moved up sharply. I think 47, 60, 65 sell, 4700 target during evening session, and stop loss should be above 4808.
So that's with regards to crude. And Kunal, with regards to base metals as well, in the morning session, most of them have been trading lower. You had China PMI as well as factories activities data that came in for China, which was weak. Copper was nearing almost $10,000 per ton. How do you see it moving from here on?
Well, I'm expecting, profit taking to come at higher levels. So for around 762 for the May contract, I will go short in copper, put a stop loss of around 66, 67, and again I'll cover my short position around 751.
Okay. And with regards to other base metals, what would your view be?
In other base metals also, my view for zinc is negative 233.50. I will short zinc, currently trading at 32.60. Put a stop loss of 35 and I'll cover around 231, 230.50.
So that's with regards to zinc. And anything with regards to nickel, lead, and aluminium?
Well, all of them have shot up significantly. I think today, Friday, we can see some profit taking in most of these base metals. Fundamentals are still not bearish, but we can see some bit of profit taking in today's Friday session.
Right, so that's with regards to where base metals are concerned. Thank you, Kunal. Thank you, participants, for joining in as well.